Hey, it's Big G here, and today I want to talk to you guys about one investment you can make right now, whether you're a seasoned investor or you're just getting started. So the key to investing is to maximize assets, which make you money, and to mitigate liabilities, which take money out of your accounts. So just as a reminder, I'm not a certified accountant, so when doing your own investments, please do your research ahead of time. So without further ado, let's get started. Number one on the list is a high interest savings account. So what is this? Basically, it's like any other bank account, but you put money into the account and expect to get back about 1 to 2% of interest each year just for having your money in the account, like any other bank. Some things to consider when choosing a high interest savings account is look for an account that promises at least 1% of interest each year just for having your money in the account. Number two, doesn't require a monthly maintenance fee just for having your money in there. And number three, doesn't require a minimum balance. So some brands I like include Ally and Discover Bank, which offer about 1% of interest each year just for having your money in the account, with the national average of inflation during normal economic times hovering around 1 to 2%. Number two on the list is my personal favorite, a Roth IRA. So what's a Roth IRA? Sounds fancy, right? Basically, a Roth IRA is a retirement fund. It's like any other banking or checking account, but you do have $6,000 of investments that are tax-free if you don't take the money out before age 59 when you retire. So the cool thing about a Roth IRA is that it maximizes the power of compounding. So you might have heard this term in science or any other thing in finance. So basically, it maximizes the value of increasing investment upon itself. So if you start with a Roth IRA in your early 20s or even your teens, over time by age 60, you could have a big investment egg to retire. So get started right now with the Roth IRA. There's a lot of companies out there, and you can invest and manage your account on your phone anytime, 24/7. So a Big G finance tip is that I have a Roth IRA, which is for my retirement, which is more conservative, but I also have an individual account on my investing app in which I kind of learn more about investing and make quicker trades to earn money with day trading. So I would recommend, from my personal experience, is having a Roth IRA for your retirement that you don't really mess around with, that you have more conservative stocks, blue chip stocks, ETFs. I'll talk more about that in a minute. And then an individual account, which kind of you can trade more and learn about investing through day trading. So number three on the list is investing in an index stock. So what's an index stock? It sounds like a scientific term, right? Basically, an index stock is a composite of different stocks into one stock, which traces the S&P 500 and other stock exchange overall, which kind of, in layman terms, mitigate risk through investing in percentages of different companies and sectors in the economy. So if you're still confused what an index account is, basically think of a salad. A salad has different pieces of the component into one salad. So for example, an index stock, you could have some Amazon, Apple, and Home Depot all wrapped up into one stock, which basically mitigates you risk and tracks the overall economic sector for tech or, for example, housing. It mitigates risk for you, the investor. So these are great for new investors and people that are kind of more conservative in their investing style. So some personal index funds that I like include Charles Schwab S&P 500 and Vanguard Dividend Growth Fund, which track the overall S&P 500, which is an exchange on the stock market, which generally mitigates risk across different assets and tracks the overall performance of the economy in this stock sector. So number four on the list is investing in individual companies. So what does this mean? Basically, you're investing in household names from Amazon, Coca-Cola, Home Depot, etc. And if you're new in investing, think of Warren Buffett. Why is Warren Buffett so successful? In addition to his work ethic, he invested in companies that he saw every day and that have major growth potential. So basically, invest in a company that you like or that you see having a future. Some individual companies that I'm investing in this year is Teladoc, which is a remote doctor service for people seeking physician care when they're in their homes. So this company has seen explosive growth over the last quarter, and is what I personally think has a great future in the future of medicine. Number two on my personal picks of individual companies that I'm investing lately is Chipotle Grill. So say what you want about this company, whether it's great Mexican food or it's great or it's not great Mexican food. So I love this company to invest in because recently the company has seen explosive quarterly growth thanks to its instituted app, which you could just pick up the food and go. So basically, I love this company because it's really future oriented of pickup delivery and its explosive growth revenue. So number 3 on my personal list, it's kind of a risk, but it's Delta Airlines. So Delta Airlines, as we know, has taken a huge hit like other airline companies during the whole pandemic. But I personally love this company because I don't see traveling and planes going away in the future. And I actually see a huge pent-up demand for people returning back to traveling. And for any airline company in terms of their revenue and how they're run, I personally think Delta will bounce back the quickest and has a future on the stock market. Some advice for investing is to, like I said, invest in a company you like and that you personally see has a future. But also when you're doing your research for investing, look at something called a P/E ratio, which is a profit to earnings ratio, which basically means the percentage of what the company earns versus its assets. So a good ratio to look on for a good P/E ratio is about 13 to 15%, which indicates a good buy factor. And to look at for companies that have really, really extreme numbers, and to really do your research ahead of time, whether this company has a good profit to earnings ratio and that you see has a good news cycle and generally has a future market. So just as a reminder to get you started investing, sign up for Webull and deposit $100 and get 2 free stocks just for joining. So without further ado, let's continue. So number 5 on the list is investing in real property. So what's real property? Isn't property all real? Basically, real property, what I mean is physical, tangible assets. And these take the category of 3 items: art, fine art, gold and silver, and real estate. You might say, why are these things? These things are not necessarily controlled by fiat currency and they're physical objects. So for example, a painting can be around for, let's say, 1,000 years, since the Renaissance times or whatever. This physical object has already a scarce supply and it's one-of-a-kind painting. It stores inherent value in its physical properties and its intangible properties of its value, of its historical value. So a great case study for you as a beginning investor or somebody that's versed in investing is to study the Colonna family in Rome. Why is this family important? Who are they? Basically, they divided their assets into the 3 trifecta of different categories of fine art, gold and silver, and physical real estate. And basically, they've withstood the history of time, and they've maintained their wealth in Rome to this day, where other royal families have lost all their money because they didn't invest in the rule of 1/3 of investing your assets into 3 things, which is art, precious metals, and real estate. So if you're going to remember anything, remember the rule of 1/3 in investing. So number 6 on the list is investing in cryptocurrency, also known as digital currency. And yes, that does take the form of Bitcoin, Ethereum, and Litecoin, among the other hundreds of cryptocurrencies available for you to invest in. The good thing about cryptocurrency that I personally like is that it has a limited supply of, for example, 300 million coins of Bitcoin, and that is a good hedge against inflation. And with economists generally agreeing that inflation is going to go up the next 2 years, with the Federal Reserve and other banks printing a record amount of money, and Bitcoin is really popular these days among new investors and even institutional investors at Goldman Sachs and other companies that are now taking Bitcoin and cryptocurrency seriously as a viable asset and good hedge against inflation in the US dollar. Some things I recommend from personal experience investing in cryptocurrency is, if you're a new investor or you're even more of a conservative investor, don't invest more than 1 to 3% of your savings or investment portfolio in cryptocurrency just because of its volatility and the fact that there's a lot of scam cryptocurrencies out there. So generally, as a rule of thumb, stay with the big 3 or the top cryptocurrencies to invest in, from Bitcoin, Ethereum, Litecoin, and a few others. Other than that, stay clear of these other more speculative cryptocurrencies for your investments. And a good place to start investing in cryptocurrency is Coinbase, which lists different IPOs and different listings of cryptocurrency, which you can easily trade on your phone, and also Robinhood, which offers commission-free for cryptocurrency buying. So number 7, and lastly in the list, is investing in yourself. What does that mean? Investing a lot of money in yourself? Not necessarily. Investing in yourself is taking care of your physical health, maybe starting a new business, or asking that guy or girl out. So at the end of the day, we only have ourselves, right, and people we love. So a great investment is investing in yourself, your spiritual and your physical well-being. That wraps up my video on top investments you can make right now, whether you're a seasoned investor or you're just getting started. All the information I talked about is below in the link to get you started right now. And if you like this content, please smash the like button and subscribe to my channel, Big G Finance and Investments. Ciao.